Hi gang, happy Sunday. Welcome back to the channel. Just days ago, GameStop dropped a bombshell. Ryan Cohen's potential $35 billion payday tied to a 10x of the market cap. And in this video, I'm going to go over with you the 5 reasons I am long GameStop and bullish on a speculative bet on GME for 2026. GameStop is still a speculative ticker, not suitable for the risk-averse investor. But for those of you that are wanting a bullish view of why I am long the stock without all of that hype and hocus pocus analysis that goes on the GameStop pumper YouTube channels, this video is going to be for you. We're going to go through my 5 bull thesis. If this is your very first time tuning in here, you should know that over the past 3.5 years, I have been profitably swing trading GameStop. Buy when it's cheap, sell into run-ups. My channel is not a buy and hold forever channel, so bears, just take a chill pill and listen along. I think everybody is going to find this is very balanced coverage in this video, but I'm going to give you the 5 reasons why I am bullish GameStop. Volatile stocks like GameStop provide a lot of opportunities for speculative traders to make outsized profits, but that gamble does come with higher risks and large moves both up and down, as I'm sure you guys are familiar with. These high risk, high reward stocks require a well thought out, actionable game plan, no emotions, and avoiding social media hype. Your success in trading a stock like GameStop profitably is largely going to come down to understanding the motivations of the big players, the motivations of the lenders, and to separate yourself from the hype and the nonsense pushed on the pumper channels, the ones that tell you to buy and hold forever, give it to your children, buy it at any price. Just a lot of bad advice going on out there on YouTube, unfortunately. We like buy cheap, sell into run-ups here on this channel. All right, let's talk about the bull case now. We know that Ryan Cohen has been quietly making changes at GameStop over the past couple of years, and there are finally some hints of a major transformation taking place for those of you that are bold and brave and bullish. Here is why I am long on GameStop. Number 1, the massive balance sheet optionality and the Bitcoin treasury leverage. GameStop has built an enormous cash position in the neighborhood of $8.8 billion plus 4,710 Bitcoin worth 425 million or so at today's price of Bitcoin. And they've done that through clever capital raises, through convertible notes and equity issuance. This cash war chest provides extreme flexibility for opportunistic future deployment. The bull case for 2026 or even over the next decade considers continued Bitcoin accumulation by Ryan Cohen and the team at GameStop and the potential future growth of Bitcoin itself. If the value of Bitcoin continues to grow, as many of us expect that it will, that Bitcoin treasury alone could drive outsized returns, especially if GameStop becomes one of the popular go-to Bitcoin holding companies with that retail brand cachet. The bear side of this argument, of course, is that Bitcoin is volatile and poor timing or a prolonged crypto winter could destroy the value of GameStop's Bitcoin holdings. However, the asymmetric upside, if there is a new Bitcoin bull market, outweighs that bearish risk for patient investors. Bullish point number 2, a successful pivot to high margin collectibles and trading cards. Yes, this is relatively new, but the company has shifted the mix heavily towards collectibles, trading cards, and graded merchandise, with very strong growth reported in the past year, every quarter that we've had so far. And those collectible products carry far higher margins than games, which are a declining revenue source for GameStop anyways. The collectibles revenue just in the last quarter is up 50% year over year, with a revenue of $256 million for that segment in Q3. That means that the collectibles is becoming a core profit driver amid hardware and software declines. The bull case then for 2026 and over the next decade is that GameStop could solidify as a dominant niche player in the physical and digital collectibles market. Partnerships like the recent one that they announced with PSA for grading and a loyal, nostalgic customer base provide a moat in the segment less disrupted by pure digital trends. This sustains modest but profitable retail operations over the long term. If we're trying to look at this rationally and consider the bear case, we must recognize that sometimes collectibles can be cyclical, and perhaps they won't replace the scale of old core gaming business. However, the pivot has already proven it can drive profitability despite store closures. So we need to stay tuned, and I'm positive about the future for collectibles, but we'll need to keep an eye on it from quarter to quarter going forward. The third reason that I'm bullish for 2026 and the next decade is the newly announced skin in the game incentives for CEO Ryan Cohen, this $35 billion non-qualified stock option award package, if approved by shareholders. This award package is an at-risk, all or nothing plan for up to 171 million shares, 100% at risk, tied to market cap and cumulative performance EBITDA goals, 10xing that market cap if he is successful. This creates a powerful alignment for the CEO with retail investors for him to both grow the company in terms of market cap and earnings of the core operations. EBITDA is core operations. We are not talking interest earned, and we're not talking Bitcoin. EBITDA excludes those. Core operations turnaround to get his bonus plan. How exactly is he going to accomplish this goal? Well, that is the raging debate between the bulls and the bears right now, and it is fair to have that debate and discussion. Shareholders will get to vote to approve this plan or not sometime in March or April 2026. But with the performance EBITDA tied to cumulative EBITDA between $2 billion and $10 billion and a market cap between $20 billion and $100 billion, it is clear to me that the incentive is there for Ryan Cohen to really transform this company. What we need to learn more about over the coming year or years is how is that plan going to be executed? And speaking of executing the plan, that is, if we're being fair, thinking about the bears arguments, they're going to say the execution risk is too high. He's not going to be able to do this. And this is where it comes down to a choice. Do you believe in Ryan Cohen or not? This is a all-in win or lose binary options package. Ryan Cohen is either going to receive compensation by hitting some of these tranches in this award package, or he's not going to get paid at all. So in my mind, at least, yes, I understand the bear argument, but the incentive is there for him to work for this. The fourth reason that I'm bullish on GameStop in 2026 and beyond is that it retains still its meme stock following, its rabid crowd of investors, and that provides GameStop a lot of ability. It's provided GameStop a lot of ability to raise money at the cost of diluting shareholders, yes, but they have accumulated a war chest of almost $9 billion cash plus $500 million in Bitcoin. And there are many investors that are okay with the dilution because they see the war chest that the company has accumulated, and they believe in Ryan Cohen's ability to leverage that into something new and transformative. We will have to see. The bear case is that people are going to get worn out from the constant dilution, and that the meme status of GameStop could fade over time. Yes, that risk exists. I'm just going to acknowledge it, and we will have to keep track from quarter to quarter, year to year, how people are feeling. The fifth and final reason that I'm bullish on GameStop in 2026 and moving ahead into the next decade relates to the store closures that are going on this very month, January 2026. By aggressively closing stores, as much as 500 I'm expecting in the month of January, GameStop is reducing its physical footprint to a lean, profitable core while transitioning towards potentially an investment holding company structure. Over the long term, let's say the next decade, a slimmed down retail operation focused on high traffic locations, high margin collectibles with a large Bitcoin treasury and potential future investments, mergers, acquisitions, what have you, could yield a compelling risk reward profile, a profitable hobby business attached to a high growth asset play. If Cohen hits even half of his stretch goals, the compounding effect could be massive. The bear case, of course, is that the video game retail business is in terminal decline due to digital downloads, subscriptions, and e-commerce. And as stores continue to close, that destroys brand presence and foot traffic and, risks making GameStop irrelevant as a gaming hub. My bet, though, is on the company putting its cash to transformative use. The Bitcoin treasury, I'm thinking that Bitcoin is likely to go up over the next decade. And for the retail footprint that the company is keeping, I believe that they will continue to focus on higher margin products like collectibles, albeit with a much smaller retail brick and mortar footprint. The bottom line for me, and it's okay if you disagree, I believe that GameStop is on the verge of becoming more than just the traditional retailer of the past. An investment in GME, though, it's a high conviction, high risk bet on Ryan Cohen's capital allocation plans, Bitcoin upside, and niche collectibles resilience. But the path to gains in the company's stock price requires that everything go pretty much perfect. You got to have a successful Bitcoin bull run. You've got to have successful execution of some transformational plan from Ryan Cohen, and you have to have continued meme stock support. While I am bullish on GameStop, I acknowledge that there is a bear case out there. We don't shy away from that here on this channel. And it is good for us, if you're a normal person, to periodically review the bear thesis against our own bullish thesis and just check ourselves, check our DD. Don't just put your head in the sand and block everybody with a different opinion. GameStop, for me, is a speculative, asymmetric, long-term play. I might swing trade it depending on what is going on. If Roaring Kitty comes back and there's some upsized, outsized volatility that is not related to the corporate news, I might swing trade it. But if Roaring Kitty doesn't return and we're just stuck looking at Ryan Cohen's plan, waiting for him to implement something, then I think this has a good chance of being a bullish long-term play for a speculative investor who is okay with a certain amount of risk. Those of you like me who are willing to weather that significant risk and who trust Ryan Cohen. I don't worship CEOs, but I think Ryan Cohen has good intentions. Those of us in this group believe there is a reasonable expectation of a completely transformative upside for the company, especially if the CEO actually already has the start to a plan to transform the company through proper deployment of its cash, real investment of the cash in some transformation of the business into something completely different than what we're thinking of today. Before you jump on this bull train with your blinders on, make sure that you understand the risks. And let's acknowledge that since no plan has been publicly communicated by management, we are relying on a thesis that that cash will at some point in the future properly be put to use. An investment in GameStop stock might not be suitable for you if you're not okay with taking on that sort of risk. We're investing even though we don't know the plan. Let's call it what it is. Always do your own DD, do your own risk assessment, and my recommendation is maintain a diversified portfolio. You do not want all of your eggs in one basket, no matter how much you might like GameStop. I want you to consider having a diversified portfolio of mostly profitable companies with growing revenues and growing earnings. And then if you want to speculate right along with me with some side bets on GameStop, I'd love to hear from you down in the comments. Let me know what you're thinking. Am I crazy? Are you on board, or are you staying away from GameStop? Thank you for watching, guys. I am Tony, and I will see you on the next video.